Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here today with a Forex market analysis for you. And before we get into it, we just want to remind you that this webinar is for educational and information purposes only. So please check out our disclaimer and realize that this is just this is also behind, so it's streaming in a little bit of a delay. Some of the markets are that are non-FX markets will be definitely in a lag time as well. So just remember that this is only for illustrative purposes. With that, let's go to our live screen here at forex-trading-unlocked.com. We have our workstation page already pulled up, and we have the dollar index chart pulled up for you. As you can see, the dollar index had a nice little boost at the last 3 days of the week last week, and today it's been under pressure starting out as the weekend has ended, and we are beginning the last week of June and also the beginning of July soon. We have a holiday week in the United States, so remember that we are most likely going to have some erratic and crazy swings as we get towards the end of the trading week. The trading week ends also on Thursday. Don't forget that. So most markets will be closed on Friday. Some markets are open globally, obviously, but in the U.S. there will be an observation of July 4th holiday. Now, just because we're heading into a holiday market does not mean that we are not going to have any lack of volatility. As you can see, the dollar index has been wedging. It has made a higher move low after making a lower move high and a lower move low, so that puts us on the neutral campaign. So we're looking for a breakout, either to the downside, taking out this last swing low from last week at 96.38, or a breakout of the previous lower swing move high at 97.78 in that area. So right now, let us see what is going on and what's cooking in the currency crosses in the Forex market. So we are going to look at the Euro US dollar, which is the biggest currency influence versus the dollar index. As you can see, it was higher today and right now is hovering just a little bit above the 50% mark of its range. So the dollar had been under pressure with most of the currencies up until a few hours ago, and as we have been coming online in the United States, there has been a little bit of strength surging back into the dollar. So right now you can see the dollar is under pressure by the major currency in the index. Now, we had a sell sign here, this bearish engulfing line, a couple weeks back. We had made a lower or higher move low. We have made a lower move high, and now we are in this consolidation range, wondering what's going to happen. As you can see, downward sloping resistance is holding this market at bay. We have a steeper slope here, so unless we can get a rally again above that we had like earlier today and continue pressing on above $1.13 even, I think we are going to stay under pressure. So $1.13.5 up here is really the key breakout area to the upside. Any rally above there will have us in a very bullish gear mindset for the rest of the week, actually. So because it would probably accelerate over a few days any breakout to the upside. To the downside, we're not expecting any major sell-off. However, a failure from $1.1165 keeps this market under pressure, confirming lower move lows after a lower move high. And we know that when you're making lower move lows and lower move highs, that's indicative of what? A bearish trend. So short term, that would definitely have the bears gaining strength, and probably you would get a grind lower. I wouldn't expect any type of explosive slide, nothing like we had back here in March. Remember, we are heading into holiday markets. There's some trade deals on the table and a whole bunch of other things that are going on geopolitically that have the markets kind of stymied a little bit. So I'm not expecting very much of a move out of the Euro US dollar. Now let's look at the British pound US dollar. This one has been rather quiet over the Sunday evening trade into Monday morning, and in fact it was slightly positive for a while, and then it started to fall under pressure, making a lower move low. Now, as you can see, this market we had here, a sell sign here. This was a bearish engulfing line, which, by the way, if you want to learn about bearish engulfing lines and how to trade these high probable Japanese candlestick patterns, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. In fact, we will give you a quick little plug real quick. As you can see, High Probable Japanese Candlestick Patterns, available on Kindle and paperback versions. So back to our live scene here. We have this sell-off now. We've taken out this upward sloping support line. We've made consecutive lower move lows and lower move highs. Today we're making another lower move low, pressing support. This is where we start to see where, since this is the second biggest component in the dollar index, I think you're going to see dollar strength resurge once again today. I think you're going to see a little follow through from what we had from last week. I believe that Sunday night was a little bit of profit taking as the weak bulls had taken profits after riding the weekend's closure, So, and as far as whether or not the momentum will be severe, I think this is pretty much like the Euro US dollar also. I'm looking for it to test support, but not really radically bash through support, because we're making consecutive lower lows and lower move highs. That does keep us on the bearish campaign here. So now let's see what's going on in the Swiss to round out our European currency crosses. The Swiss, however, has been in a very neutral trade, as you can see, for the past few weeks. So we are keying off this last swing low here. It is in a bearish trend on the intermediate and longer term, because it's been making lower move lows and lower move highs. However, the past week it's been basically going sideways. So we're not looking for anything here, only a breakout. Now we are close to this rising support line. So if we fall below here and take out 93.71, that would obviously be very bearish for the US dollar Swiss. Now above 95.57 will have us pressing this downward sloping resistance line, but right now I think that's going to be contained. Even if we have dollar strength, I think that we're not going to see much of an excessive move in the dollar Swiss. Reason being is Swiss is a flight to quality currency. So is the yen, so is the dollar. The yen has been doing pretty much like the Swiss. Now you can see today it's getting a little bit of a pop. This has been a really hard market to gauge. The US dollar yen had a bullish engulfing line buy signal here that was triggered last week, and now you can see we're getting follow through. But I would be very leery of this one. This market has done nothing but disappoint. You can see that we did have a little bit of a nice swing trade here at the beginning of June, but otherwise it's been a grind. Even if we have an excessive move to the upside today, it's very likely we're going to settle into this kind of boxy, really tight range. So I'd be very careful with this. However, this is another indication that the dollar strength is coming back into the market, as the U.S. stock market is open right now. So in fact, we can actually take a look at, so here's the CME site. Yeah, the S&Ps have dropped now. They were higher, much higher on the day before the market opened. Now that New York cash market is open, the futures are dropping significantly. Okay, so there you go. Dollar is getting a rally off of the obviously impending bearish wave that's probably going to hit the S&Ps, not necessarily the NASDAQ, but the S&Ps over the course of the next few hours. So let's take a look at the Australian dollar, US dollar. So we had seen these markets also gaining strength versus the dollar earlier in the session, but the ranges were very tight. Now this here has also a bearish engulfing line sell signal. Read the book High Probable Japanese Candlestick Patterns, and you'll learn how to figure out the target zones and how to capitalize off of these moves. So anyhow, we had made a higher move low, a lower move high, and now we are just kind of drifting on support. So right now we're going to look for this to continue lower. We had taken out this long trend here that we had been rallying up since the middle of March. Does that mean we're bearish? No, it means we're more neutral to bearish, but we are definitely looking for it to test support still. Now the New Zealand dollar, US dollar has been trading similarly in tandem to the Australian dollar, US dollar, and as you can see, this one as well has been going sideways. Now this one had made a double bottom low here. So this is key support here at 63.84. Any failure here will have us looking to test this upward sloping support line here. Excuse me. And should we take out this line here, then we are off the bullish campaign. Now we're already sideways in this one, and because of the lower move lows and lower move highs, that already has us kind of leaning towards support. So the New Zealand dollar is probably going to be our trigger. And remember, we could have divergence where the Australian dollar rallies versus the dollar and the New Zealand dollar doesn't. This is very possible. They don't have to trade in tandem. They just happen to be in a similar trading zone. And there's been a lot of very similar geopolitical influences that have kept them in a very similar chart pattern. But right now we are looking for weakness. Obviously right now it's still a quiet day there. Now let's look at something a little bit more along the lesser currency crosses. So the US dollar Turkish lira has been going sideways for the past 2 weeks. This is a good indication too as far as dollar strength. Obviously the dollar strength versus the lira has balanced out. Only a failure from $6.68 here. Will we be on the bearish campaign? I would be very careful about being very bullish as well. When this market is consolidated, if you look at it, this is how it used to trade a long time ago. Well, see, it doesn't even look like it because here the market is so tight. Now the market got so volatile and rallied so high that even these days here don't look like much. But if you go like this, see, now all of a sudden it looks like that period from months and months ago. So, but that's how much volatility we have. I would use caution with this one right now, though it is showing strength. Now, you want to talk about a market that has some high probable Japanese candlestick patterns signals here. We had the bullish engulfing line buy signal here earlier in June. And then we had this nice little trend higher that was established. And then we had this 5-day pattern established last week. Now, if you read the book, High Probable Japanese Candlestick Patterns, you learn what kind of a continuation pattern this is. So, and now we are pressure this downward sloping resistance line and most likely head up into this target band of 23.62 pesos to 24.12 pesos to the dollar. Does that mean we're an overall bull? No. Short-term bull? Absolutely yes. Intermediate, this market's in sideways. And even you could say intermediate to longer term, this market is a bull. So the question of any bearishness here right now seems to be off the table. U.S. dollar strength seems to be holding and getting better in some of your lesser crosses. Now let's look at the U.S. dollar Canada. So the U.S. dollar Canada, this market also has made a nice little bottom after filling this gap that was left here in March. Obviously bearish, excuse me, but this market has not been too bearish, obviously, lately. Now, we had this buy signal here, which is a bullish engulfing line. And then the market kind of went sideways. And what happened here? We've established a higher move low. And then last week we made a higher move high. Now today the market's been kind of sideways with only slightly positive results right now. It's staying kind of tight. So let's see what happens. But this market is wedging. We have made a higher move low, excuse me, and a higher move high, which is indicative of what? An upward trending market. So we're looking for this market to continue a little bit higher. Excuse me. I just need a sip here. The throat's a little. There we go. I've been talking way too much this morning, so my voice is a little dry. So anyhow, $1.39.89 to $1.41.53 is our target band up here for the U.S. dollar Canada. This would put us back into this main consolidation zone where we were for most of the end of March all the way into the end of May. And I think that would be probably, since we're looking at facing another wave with the coronavirus right now globally as well as in the United States, most likely this is a chance for this market to get back up to where that is at right now. Or back up to where it was back then. Now, if we do see a failure from this low right here, let's put this ray right in here, that would have us on a negative bias. So be careful. Remember, we do still have this downward sloping resistance line here. Should we fail right here, we'll be testing this $34.85 in no time, and any failure from there will definitely have us back on the bearish campaign. Remember, the long-term trend here is bearish. Now let's go back to the Euro US dollar, where we started out our webinar, and see where we are at right now. Now remember, the stock market is starting to fall apart, and the Euro US dollar now has broken even more, another like 5-10 pips. Now it's pretty much in the 50% part of its range. If you look at this, we have a 15-minute chart here. You can see that we started this webinar just about right here. We were trading at $1.65. Now we've broken another 8 pips, and we've come down to this little target line. This is a good support area. So obviously on the 15-minute, we've taken out this support upward sloping trend line. We've gotten this nice little slide. Now the question is, will this get a bounce? Remember, this market has been trading higher for the whole session so far, for the whole week so far, which obviously began less than 12 hours ago. So But we're seeing a nice little retracement back to the 50% zone. Now, this is a very critical thing that we have going on with the euro US dollar here. Should we take out this $11.65, that will help drive the index, the dollar index higher, and probably help set the tone for most of the other global currencies going into the beginning of July. So we'll see how this manifests. We only have one more trading day left. Or excuse me, 2 more days of trading left in June before we start the month of July. Can you believe it? It's already halfway through the year. We're going to be starting the third quarter. So, but these things happen. It's amazing what a 2020 it's been. The first half of the year is going to be wound down, and we're going to be looking at, well, I would assume probably just as much mayhem and craziness as we've seen over the last 6 months. So volatility is something I think we're going to continue to see. I wouldn't be too worried about any lack of activity in that regards. But right now we are heading into a holiday market in the U.S., so volume is going to start to get a little thin. A lot of computer trading and algos going only. Traders are going to be going on vacation and definitely stepping on the sidelines for at least the next week or so. So use a lot of caution while you're trading these currencies and other markets, and be mindful of these things. And just remember that right now it seems like that even though the dollar has been under pressure for quite some time, last week's little bounce seems to be a little precursor that dollar strength is creeping back into the marketplace. And especially since we have fears of the coronavirus and the stock markets. Global stock markets were up overnight, and that was one of the reasons why there was a big dollar sell-off. As we got closer and closer and closer to the U.S. opening, and now as you can see here, we have the CME site. The S&Ps, this is a little bit of a delay, but they have already gotten down below. Now they're 29.92 and a quarter. That's a big move. So the high today was, they were trading at it was at 26 half, yeah, 30 26 half. Now we're at 29.91. That's a big slide. That's a very big turnaround in the course of just less than 12 hours since the market was open. And that's even for the futures. So we're watching the stock market sell-off. This is a big deal, helping the dollar gain strength. And if we see follow-through in the stock market selling off over the next couple sessions as we end them. Remember, it is quarter end, so the stock market has been up. Here's another thing you got to think about. Stock market caught a nice little ride. Anyone that's hasn't taken profits or wants their month to look good, they probably are going to be taking money off the table right now as far as the portfolios are concerned. It would make sense. It would definitely be probably the thing that most of the fund managers are looking at doing. So if that is the case, having the market under pressure because of extra selling, which is just profit taking more than anything else. I wouldn't say that it's necessarily bearish, but it could be. There's more than one reason for why people are buying and selling. That's for sure. But should that scenario unfold over the next couple days, I would say that we probably will see this euro US dollar. Right now it's trading at $1.1259, probably taking a nice little test of this $11.65. But you never know. We take out this downward sloping resistance here. We'll be at $1.13.5 in no time, which we were looking today. It was looking like a balloon underwater. The way it was trading, it was a one-way trade up for the, especially as we were getting closer and closer to the pre-market hours in the United States. Now with the stock market falling back like it has this morning, obviously once again we're getting dollar strength. So with that being said, I want to thank you very much for your time. Please read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. You can learn how to actualize these trades, these signals when they occur on your own. Or if you want to follow them, you can follow our subscription service, which you can find on our website, www.forex-trading-unlocked.com. And just go to our signals section, and you can see how to sign up for that. With that being said, I want to thank you very much.